Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, streaming live in YouTube. We have a lot of greens on the screen here this morning. As you can see, gold up $10. Silver is lagging a little bit, but we have a really strong move on Coinbase. The estimates of Coinbase blew the expectations. We also have the CPI came out this morning at 5.4% as expected. So we have a lot of volatility in the market, and we're going to take a look and see how the markets are reacting to this. We'll be right back. Let's see, currently the gold market is up about $10.5. You can see the market has entered into the target zone pretty much as expected in the area of distribution of supply. So we've seen a rally based on these economic numbers that essentially has brought the market up $11 in gold. But the silver market is lagging a little bit here. With an upward bias. It's trading around the average price of about 23.40. So a close about 23.40 is going to activate a bullish price momentum, and I'm looking for buyers to come into the market here. The economic news of the CPI pretty much, even though is according to estimates, if you take a look at the 10-year note, I believe trading at about 135, which has come back from a low recently made of about 112. And we are trading last at about 135, 136, up about a point and 3/4. It appears that the market on the 10-year note, which is the instrument that we watch that essentially guides us through the yield curve, seems to be indicating that we have seen some kind of a bottom in interest rates, as you can see here. If we put aside for a minute the economics and what's going on here, which we'll take a look at individually, the leading indicator that we watch very, very carefully is pretty much the CPI. And what I want to see here is the rates to revert from, the 140 area. If we go through the 140 area, I believe the market is indicating that inflation is going to heat up and rates are going to go up. And if we do see rates go up, It puts in jeopardy, obviously, the position that the feds are in, basically, that if the bond market begins to anticipate that inflation is not going to be transitory, which is what the government is trying to make us believe, then we're faced with a dilemma in terms of the debt, the cost of the debt. The cost of the debt begins to put pressure on the balance sheet. As the rates increase, it increases the cost of financing, and it begins to put a lot of pressure, obviously, on the economic system, on the balance sheet. Just if we were to have a personal loan and interest rates are going up, we have less liquid cash to spend anywhere else. And that begins to create a tantrum, what people call it, in the markets, because the financing of everything across the board begins to increase. So we're dealing with a situation where even if you factor in, for example, the current inflation rate that we have of 5.4%, and the yield on the 10-year note is 1.35%, you're still looking at about a negative 4% real return if you factor in inflation. This is according to the inflation that the government is telling you. According to shadow stats, which includes the energy and the food prices, inflation is running more like 9%, maybe 10%. So factor in 10% inflation, you're getting a rate of even 1.5%. The purchasing power of your base currency begins to implode. Even though you are increasing in value in equity in your assets in US dollar terms. As the dollar declines in its actual base currency asset, the denominated currency the asset is, the asset prices will do the reverse, will increase 30%. But you're not really getting ahead, than anybody else, or you're not building real wealth, basically. Because everybody has made a 30% increase in real estate as the dollar has declined, as an example. So the fact that interest rates are beginning to be sensitive to where we are in, as the economy, according to the CPI, begins to heat up, and it's not temporary, we are going to begin to see this integrate itself, embed itself in the economy. And once it picks up momentum in the prices, very difficult to bring them down. So we're dealing, or I should say the feds are dealing with a dilemma in how to control inflation without creating a tantrum in the markets by raising interest rates. The market, the stock market is up, 11 points. The E-mini, NASDAQ is up 28, 29 points. So obviously, the market seems to think that the rate of inflation is acceptable and we can live with, according to the reaction in the market. So it looks like this has given pretty much a lot of room for the Feds to put on hold on its policy and continue to say that they are going to allow inflation to increase as the market demands. One of the comments that I want to make here, with regards to Coinbase. Coinbase earnings crushed estimates. The stock isn't falling anymore. Coinbase Global topped Wall Street forecasts for sales and profits in the second quarter. As trading volume and transactions revenue continued to build. The stock fell in after hours of trading on Tuesday, reflecting a muted third quarter outlook from the company, but have rebounded in the early hours of Wednesday. Coinbase easily topped consensus estimates for sales and profits, total revenue of $2.2 billion, beat forecasts for $1.85 billion. Adjusted earnings before interest, taxes, depreciation, and amortization came in at $1.15 billion, surpassing estimates for $854 million, according to Fact Sheet. I wanted to share this information with you because this is a sign of where the money is going. Coinbase, Robinhood are new platforms, basically, that are being created for accommodating this tremendous amount of virtual trading that's going on. And Coinbase is probably one of the biggest exchanges, or fast becoming one, since its IPO. And we're paying very close attention to this stock because it has tremendous upside potential. The IPO was at $429.54 basically, and we've came down about 208. So we dropped more than 50% in a very short period of time. And from the low of 208, we're trading at about 285 as we speak. And it has completed the targets on the weekly basis and also has completed a 38% retracement from the high that we made at 429.54 to the recent low that we made at 208. So this is a stock that we've been recommending for our traders in our private trading room, basically to buy and hold. And it's been obviously a little bit choppy here, but we've continued to recommend to buy during this correction, and it's been working out really, really well. Let's continue to watch the market here as it begins to react to this economic news, everything that's going on, earnings coming out higher than expected on a lot of these digital instruments. And so let's watch the market here for a little bit and see what's going on. The dollar here is down on the news, the economic news, the CPI news. It was looking for pretty much, I think, a bigger number in inflation, forcing basically interest rates to go up and obviously supporting the dollar as a consequence. So You can see the dollar is down on the reaction of the news, but we have a lot of greens on the screen, as I said, and uh, we want to take a look at a lot of these instruments here that are being offered, which are tremendous trading instruments. GDLC is the grayscale digital fund that essentially just a few weeks ago was trading at 28, 27, and we're at 40. We've seen a high of about 42. These are incredible instruments that are digital instruments with high level of volatility. So if you're trading these instruments, you want to be aware basically the volatility factor and adjust your positions accordingly. But it's a trader's dream come true in that the volatility offers tremendous opportunity. Robinhood. Let's take a look at Robinhood here. A little bit of a correction here this morning into what appears to be buy levels, buy triggers suggested by the VCPMI. And the market is coming back down only about 3.5. This is another instrument that we want to add on any corrections. Bitcoin is trading at 38,000. I'm sorry, 46,295. And I believe it is the leading digital currency that will prevail any regulation and any challenge from other digital currencies. Furthermore, I think we want to pay attention to Bitcoin, because if we begin to see major commodities beginning to be priced in Bitcoin, particularly the energy markets, you can rest assured that the argument of Bitcoin becoming the U.S. world's reserve currency, challenging the U.S. dollar, will become very popular. The argument will be justified by the fact that the dollar is imploding, and the technology behind Bitcoin, which is blockchain technology, which is what I believe is pushing this to these incredible dimensions of decentralized control by the central banks. And in discussing this with one of my traders here yesterday, the only challenge that I believe could be a real challenge to this new sentiment of Bitcoin becoming, a currency, is if the government publishes, or I would say introduces, a U.S. digital currency that is backed by gold. Otherwise, even digital assets except for Bitcoin maybe, are not backed by anything. What you're beginning to see here is the reset of the monetary system that is accepting Bitcoin as a form of exchange. People are doing transactions privately, one-on-one, through blockchain. It's a question now whether blockchain, whether Bitcoin becomes accepted on a global basis. And it appears that we headed that way. We have Morgan Stanley offering portfolios to their wealthy clients in digital currencies, digital assets. And I believe we're headed in that direction. But I don't believe that it will replace the gold market and the silver market. I think the smart money obviously got into Bitcoin. The aggressive speculator, I wouldn't necessarily say the smartest money, but the aggressive speculator began to see the potential for this as it is unfolding in what is becoming, I believe, a serious asset that is being accepted in the investment community as a form of exchange. And the more that we see these instruments being used as a form of exchange, I think the more acceptance is going to have in financial institutions, and it could eventually become a tier one asset. So it's an exciting time, but be aware that the volatility that these instruments are unfolding are by far above any benchmark previously used. They're not regulated, and therefore, you know, it's like the wild, wild west. And, you know, if you want to speculate, that's great, but just be prepared of the volatility that these instruments offer are by far nothing like I've ever seen in my lifetime. But they are great trading instruments. So there is still a lot of uncertainty as far as regulation and application, and but in the meantime, you can see where the money is going, and you know the investor community wants something like this instrument to be implemented in the market as an alternative instrument to the precious metals and gold. I think that if we didn't have this digital currency challenging the gold market, you know, the gold market could have been at 40,000 under this economic situation. And, you know, I don't see, particularly now with Bitcoin at 40,000, which is an asset that was created 10 years ago out of thin air, out of just some codes, some algorithms, could replace the actual money asset that I call divine money. Gold and silver are divine money. They will save us in times of chaos, in times of economic collapse, currencies collapsing throughout history. And this is the first time that we have to deal with a digital currency challenging the status quo, and even challenging the natural resources created by God, like gold and silver. So I think that these are definitely exciting times, and what we're going through is simply a recalibration and adjustment. As you see, what happened here since last year in March, a tremendous amount of adjustments are being made. Now we're dealing with the fact that inflation is upon us. And I believe it's just a matter of time that this reflects in the price of gold and silver. The premiums in the cash market actually have come down quite a bit, and I did purchase some silver yesterday, the day before, physical silver, some wafers, 99.9%, and they were pretty reasonable. I paid about 20% premium, and I'm comfortable with that as I am accumulating, and I recommend in terms of the physical market, if you can get a hold of any physical silver or gold, put it away. Put it away in somewhere safe, underground, wherever you can store it away from the banking system. I would recommend to do that as just part of this process of hedging, you might say, against what is inevitably coming again, which is a dollar devaluation, which is happening as we speak. It's a silent devaluation taking place. The only thing that I want to point out to you is that the speed at which this is happening, it's a lot more than I think anybody expected. And it's simply as a consequence of the pandemic pushing things forward, pushing the digital economy forward, pushing institutions, companies forward in adjusting into the digital economy, as well as everybody else. So the acceleration is obviously happening very, very fast. I've been very long-term bullish here, and I think whenever we see these corrections in the market, although it really kind of frustrates you if you're thinking of, if you're a bull, I'm very frustrated, but I also take a look at the value, and I bought some more down here at these values, and that's what I recommend to do. Continue to buy corrections and continue to maintain an upward bias, as I believe we could be entering a high level of volatility and a reversion back up to the mean of 1810 basis the gold market. Thank you again, everybody, and have a great trading day here. In the meantime, I will talk to you soon. Be well. Take care.